Hello everyone and welcome back to the channel, and this is this week's look at the housing market for Florence, South Carolina for the week of Tuesday, March the 26th, 2024. And of course, I'm your host, Sammy Fryer, licensed realtor in the state of South Carolina. And with that said, let's jump right in and look at the data. And let's start off by talking about the hottest topic of the week, which is going to be the Federal Reserve meeting from last week and interest rates. And so the news is not much has changed from the last time we heard Chairman Powell speak. Interest rates are unchanged. They do still expect to have the 3 rate cuts forecasted for this year. And so that is the current forecast, in spite of the fact that they are still looking for greater confidence that inflation will move down towards that 2% goal. So basically what that means for you and I is that mortgage rates are not going down. There was an expectation and a hope that they would go down in March. That did not happen. And now the expectation, as we've already talked about, is that you could start to see some drop in those rates in June. But it does indeed sound like seeing those rates come down is going to be a bit of a slow drip. So the next time to expect to see any, I guess, somewhat dramatic change in mortgage rates could potentially be June. And so with that said, we always want to look at what the current rates are for today. And so for today, March the 26th, 2024, for a 30-year fixed loan is 6.91%, which is down ever so slightly from last week's number at 7.02%. So a tenth of a percent drop from the beginning of last week, as you can see there. Now, with all that in mind, let's look at the local housing market data. And so the first place that we want to look at this week is the median list price. And so you can see that over the last few weeks, there's been a sharp spike in median list price, up just over $40,000 in Florence over the last 3 weeks. And this is not atypical as we're moving into our hottest time of the year. And we will see these numbers expected to climb as we move into the peak, which will be as we get deeper into the summer. But as you can see over the last 3 weeks, home prices are rising. Median list prices are rising up over $40,000 since March the 1st. And yes, this is a good sign, but we must proceed with caution as we look at our next key data point. And this is the one I really want us to focus in on today. Aside from interest rates, the news with interest rates is property prices with a decrease. Now remember, we've talked about this the last couple of weeks. Let's go back to the 7-day average. You also see that since March the 1st, the properties with a price decrease is also climbing. And so for the last 3 weeks, that number has increased now up to 39.7%. And remember that 30% is average. So we're at an above average number for prices, or properties with a price decrease. And even for this time of year, going back to last year, that number's up about almost 4% from where it was last year, which was also higher, which would have been an increase of about 20% from the year before. And obviously this was at the beginning of the interest rate spike. So what is this telling us? And this is the concern with this data. And this is really what I want the takeaway from this week's episode to be for you, the audience out there, is if we have an increase in median list price or even a stability in median list price on the higher side, but yet we're having properties with a price decrease, then what that tells us is that sellers are not being sensitive to how consumers are responding to the cost of money, which goes back to the interest rates that we were just looking at the beginning of the video. And so a 39.7% increase, well, not increase, the number is increasing, but a 39.7% 7-day average over the last 7 days, closing at last Friday for properties with a price decrease, is not necessarily a positive metric. And as you can see, that number is up slightly from a year ago, which was up significantly from 2 years ago. And then you can see over the last 5 years, we haven't been above 27%, barely above 26%. And remember, 30% being the average. And so over the last 2 years, we see this increase in properties with a price decrease. That is, properties that get listed and have to decrease their price to sell over the last 2 years. And obviously this was when we started to see the increase in interest rates. So to me, the takeaway, and we did a video on this recently on this channel, is if we're selling a house, we need to be sensitive to this information. And this is what we talked about in that previous video. If you overprice the home, then there's a great chance you're not going to get any offers on the home. The home's not going to sell. And so it's really important to make sure that that list price is precise. And obviously we want to get the most value for our homes that we can get, so we price on the high side. I understand that. What I'm saying is that if your list price is 15% higher than the actual valuation of the home, especially as you start getting up to the 300, 400, 500, 600, $700,000 homes, you're going to have a very hard time selling that house, most likely according to the data at that price. And remember, as we say every week, or we will be saying every week, segment the market according to where you are at in the market. And you can see when we segment the market out, the data does reflect this. The bottom 90-day tier of homes is actually below the national average for price decreases. So they're not seeing this problem as much with homes that are around $125,000 or below. But when you get into these top three tiers in terms of median price, all three of these have above averages. And if you look at, interestingly, the next tier, which is your $200,000 homes, are actually being affected the worst in Florence at this time. And so you can see 46.23% 90-day average of homes with a price decrease is pretty high. But even the top market segment, which is going to be your $500,000 homes and up, is still at 36.13%. So everything in the top three tiers of the market in terms of median price are experiencing this effect, which would seem to indicate the response of consumers in terms of the cost of money, i.e. interest rates being at 7%. It's just something to think about. Some of you out there that are looking to sell your home or actively selling your home can afford to put it out there for a higher list price and sit for 3 months and see what it does, and then maybe adjust accordingly. But some of you out there, for various reasons, just want to sell. Make sure that you're getting a good home valuation done and setting a good list price on the house whenever you list the home to sell. And so just to recap, interest rates 6.92% as of today, down 0.1% from the beginning of last week. No real expectation of seeing any major change in that number until June at the earliest. The Feds are still not expressing a great confidence in terms of their target number of 2% with inflation, though they do still expect to see 3 rate cuts this year. Yet in the midst of all of this, home prices are rising currently, which is a seasonal norm in our market. But that information has to be tempered with price decreases, which are higher than national averages and still sitting at a higher number than they've been in many years over the last 2 years, with only a slight decrease from where we were this time last year. And so I think the big takeaway is, as I was just stating, it's really important to list our homes at the right price while still trying to obviously maximize value. But if we get out too far away from the value of the home, it's basically just going to sit. That's pretty much what the data shows that it amounts to, and we're going to end up decreasing the price anyways. And so from that standpoint, it just depends on where you're at and what you're willing to endure. I will say that if you would like a complimentary home valuation and or to schedule a listing appointment and presentation where we could look at a net seller sheet and look at different pricing strategies and what the net would be at each one of those price points, then as always, my contact information is down in the description of this video. Reach out to me today. You can call or text me anytime or send me an email, and I'll respond to you promptly and we can get that scheduled. I would love to work with you on listing your home. And so what I like to say is there's never a bad time to buy or sell. If you need to buy or sell, you need to buy or sell. But we do need to be informed with the data to make good, educated decisions. And so that's what we're trying to do here, is to give you something that will be helpful. And so if you found this helpful, please give the video a like. Please subscribe to the channel and share, as that helps us out a lot to allow me to be here to put these presentations together for you guys. And in the meantime, I wish you all the best in your real estate endeavors. And y'all take care, and we'll see you on the next one.